Well, it's been a pretty exciting day today. A lot of interesting developments with the pretty sharp reversal across many asset classes. Crypto's rallied ferociously today. We've had pretty good rallies, not only in Bitcoin and Ethereum, but just about all the altcoins. As a matter of fact, we've had nearly an 11%. I actually think we had an 11% day in Ethereum Classic. We've had 7-8% gains, 9% in others. And the stock market itself is showing quite a rebound as well, with 3+% in some of the indices. And finally, commodities also have quite some upside. Oil was up over 4% today. So this is the kind of start you would like to see if we really have found a bottom. And honestly, any of these asset classes, but we're not necessarily out of the woods yet. So we're going to take a quick closer look at Bitcoin. This is the 1 hour chart. And we had this giant diagonal. We were making preparations for a lower low, and we've had quite a rebound since. So just to refresh, Bitcoin and Ethereum, as well as Ethereum Classic, I believe, have had their original lows on January 24th, and they did not make a lower low on February 24th, although most of the other cryptos did. And we have what is best interpreted as a three-wave rally up, and it looked like we had a 5-wave setup down with a second wave bounce, and it looked like that we had a third wave in progress, or at least beginning to take shape. And well, alas, we have turned back around. And in Bitcoin, we didn't quite get to what we would consider the pivot zone. So if you recall from some of my previous updates, whenever we have a 1-2 downside setup, we typically have the 0.618 extension and the 0.764 serving as very key resistances. Once you get through both, and if you can stay below the 0.618 extension, that's usually a very good indication that a true third wave is underway. And we haven't seen that yet, but we also haven't broken through it. So that's Bitcoin. We've had, again, pretty good bounce there. When we shift over to Ethereum, the story is very similar, in which we've had a pretty good rally back up. And in this case, we did make into our pivot zone. That was about 2750. That was the height of the panic. I remember thinking that, hey, the crash downwards is underway. And then we reversed pretty sharply. And it looks like we have 3 waves up, which I'm going to dig into momentarily. Ethereum Classic, as I have been mentioning, has become my primary indicator of crypto sentiment because it seems to move the quickest and most explosively across the complex. I'm sure there's smaller coins or newer ones that I'm not as closely, I'm not monitoring as closely, that might move quicker and maybe more volatile, but Ethereum Classic has become kind of that indicator. And here too, you see that rally, and we came very close to invalidating our rally setup. We actually had, as I mentioned, 2 lows. Our actual low was on the 24th, just like Bitcoin, Ethereum, at 21.23. We came very close to hitting that low of, was it 23.24 that we hit on February 24th. That was the secondary bottom, which for a lot of cryptos was actually the low. And well, we came very close. We came within a couple pennies, actually, looks like within $1, and we bounced back up sharply. And a lot of signs that this could be a local bottom at least. And here we actually almost went through the pivot. We didn't quite break the 0.764. That's actually where I had one of my alerts set initially. And I've done that for other coins, and we reversed very sharply. So that's a promising sign that red may not ensue as we had been expecting. Dash used to be one of my primary indicators of crypto sentiment and still remains as one of my top, just because of how quickly it tends to change. We see inflection points very clearly. And here you have a clear 3-wave setup. And I'm actually going to put my fib extension tool, because Dash has been giving us the cleanest structures of pretty much any crypto coin. So even if Ethereum Classic gives the earliest signs, I'd say Dash has the most clear structures. And it looks like we actually hit the perfect 1-to-1 extension of what we had set up as our initial rally. So if we draw a pattern, it looks like an A, B, and a C, and it hit the 1.0. So that looks like a corrective bounce to my eyes. Whether this is a 4th wave after a third of a third, it could be the third of this bigger third, or the start of a bigger, more significant rally is yet to be seen. So we're in a bit of a dangerous location, and we're seeing the same kind of thing in equities as well. Again, I will shift to that in just a second. Now, here is where the concern lies. Actually, I changed my mind. I'm going to go to the equities first because we're on that tangent right now. Anyway, this is the Dow, and for the Dow, the S&P, the NASDAQ, all of them have had such a powerful rally to the upside that we've actually, well, if anything, it's almost a little too high to be a 4th wave bounce. This should have been a 5-wave rally down. And I know you can't see the 1st wave down here, but assume there's a 1-2 there, 3rd wave, 4th wave bounce, 5th wave. That would be very convincingly the bottom of our C wave. And this is arguably almost too high to be a clean fourth wave bounce. When we take the extension using our Fibonacci numbers here, you got your A, B. When you do that, we cross the 1.236. Typically, the 1.0 is where you would end. I think once we cross the 1.382, that would probably end any concerns that we would have another pullback. This is actually what we're seeing in the S&P 500 as well. Right now, the bullish optimist has this counting as, well, almost 3 waves up. We need to go a little bit higher past the 1.32 extension. Look for a fourth wave consolidation that's relatively shallow, and we would get a fifth wave higher. If we see this, that would be indicative. Well, we'd look for a corrective second wave and then a bounce. So that's what we're looking at in the equity space. The reason I bring that up is because we're looking for the same thing. Our rally has not looked as complete. It's been breathtaking in absolute terms, but we haven't quite seen the same kind of extensions in something like Dash or Bitcoin as we have in the equities. I'm actually going to shift to the S&P. I've been following this like very closely, like a hawk, honestly, because I've been following this all day. But we made it just about the same. We didn't make it quite as high, just below the 1.236 extension. I got too many drawings, so I'm not going to show those at the moment. But that's really, again, a lot of bullish signs in the crypto space, but it's more ambiguous in the cryptos. So here's where things get interesting, though. If you've been following my updates, I mentioned that a couple of cryptos broke their supports. So again, the red line here, the major support, that is based on whatever the 2022 low has been. So for most coins, it was on February 24th. For other coins, it was back on January 24th. And you can see that there was a local bottom, at least, in Chainlink. Well, unfortunately, we had this happen. Put a big red circle on this. If you saw my community posts, you would have seen this. I put that up a few days ago. This was a very strong sign that we may see some follow through for the rest of the crypto space. And the reason for that is, again, just to refresh, we had a setup to the upside, whether this is the first wave of a diagonal or we were completing a leading diagonal, whatever it was, you cannot go back down below the origin point of your rally. This is the #1 rule of Elliott wave theory. You cannot do it. And we did it. So that means this entire bullish setup is dead. Now, that doesn't mean that that can't be a bottom. This may be the actual bottom, and we may be ready to take off for the heavens. But this is a very ominous, very strong sign that we're not done yet because we broke this. So all this yellow, green, all this is dead effectively in Chainlink. And when we look at the bigger picture pattern for Chainlink specifically, well, this is, again, not a good sign. I'm actually going to go zoom out a little bit. This is a little too close. So our overall, man, I need to zoom out way more than that. There we go. So that means that we have our A, B, and our C wave. And, well, this entire rally from our February 24th bottom was almost, well, it's definitely not an impulsive structure. It's not a bullish structure. So best case is that this is the actual bottom. We didn't quite make it the purple box, which, that could be a thing that's not really frowned upon necessarily. You don't always hit the standard targets. Didn't quite have a 30.2% retrace. And when I adjust the view for the MACD, we still have a pretty good divergence. We got a lower low, and our divergence has maintained itself. So that's a very good sign that this could actually be the bottom. That is a good sign. I mentioned Chainlink. The other coin in which we had the same thing was Polygon, and Polygon had kind of been sneaking under my radar. I had not been paying much attention to Polygon, but we broke through our support probably earlier than any of the crypto on April 26th. So it's been several days, but the same story holds for Polygon, in which whatever rally structure we may have had starting on February 24th is definitely dead. We broke our support. So our immediate upside setup had broken. And when I zoom out a bit, Polygon had a very robust rally in 2021. It has a much more ambiguous overall structure. And here too, you can see an MACD divergence, which is a good sign. And well, we didn't quite make to our 1.0 extension. If we look at this whole thing as an A wave or whatever you want to look at it as, and again, ideally we would have made that blue box. So there are some signs that this could actually be a bottom. If you're a glass half full kind of person, you could take that as the ultimate bottom. Maybe we don't follow through any lower. Final one that I'm going to look at is SHIB. I mentioned two cryptos, actually three. SHIB is another one that also broke its support from our low on February 24th. However, we did not break our ultimate low that we hit on January 24th. So this is kind of a bit of a tweener in which we broke our immediate upside setup, but we didn't quite break the entire thing. So that was a lot of mumbo jumbo. Where does that leave us? I'm going to look at the Bitcoin chart, big picture here. Well, we would look for a sharp reversal because, again, we're not out of the woods. This does not necessarily mean that suddenly everything is all golden again. We could actually see a situation in which we could see cryptos diverge from equities. And what that means is that I've been mentioning, we've had a lot of alignment of the inflection points between the equity space, the stock market, and cryptos. A lot of the major bottoms, major tops, they've all coincided very closely. We've seen them move generally in the same direction. This could be the point at which it decouples. And I mentioned that because in Elliott wave theory, all asset classes, they kind of move on their own. Even individual stocks do, individual coins. And there's no rule in the book that says cryptos are going to be tied at the hip with equities forever. So we may see some very bullish action in the equities while seeing the cryptos diverge. One other thing is that the Russell, the small caps index, is actually poised to make a lower low. Like it has a much better setup to go down, whereas the large caps and tech are not. So we may even see divergence within the asset class itself, within the stocks. So therefore, we're not out of the woods. There's no clear upside setup yet. As I mentioned, at best, we can count 3 waves up. I'm going to zoom up on Bitcoin specifically. Our bottom was hit on, was it April 30th? ABC. Sure, we could be in the midst of a 3rd wave, but we need to see some more upside action and a 4th wave and a 5th wave bounce to confirm, not necessarily confirm, but to give us a 5 wave impulse up. Same thing in Ethereum, Ethereum Classic. Again, we have 3 waves up, very extended 3rd wave. Is it a C wave? Is it a 3rd wave? Got to wait to find out. Dash. Like I said, I always look to this for the cleanest pattern. And right now, this looks like a textbook corrective wave up. So that would be a fake out. If this is a fake out, if we turn around, we don't have too much cushion below us before we invalidate. Chainlink, again, nice bounce. It was looking very much like a consolidation before, more low, more downside. We didn't see that. We have a bounce, but again, nothing clearly impulsive and bullish. Polygon, again, just a 3rd wave, 3 waves up. We may be in the midst of something special here. Again, 1, 2, maybe a nested 1, 2, might be in the 3rd of a 3rd, something like that. And again, I'm going to show SHIB because that's another one that did break one of its supports. And well, it's anything but impulsive. We got some work ahead of us cut out. So there you have it. Not the clearest picture. So we at least have we can breathe a bit of a sigh of relief. There's a bit of a reprieve at the moment, but things could turn around real fast. This market's been very volatile in pretty much every asset class. So maintain your risk management strategy and look for the setup. If we get 5 up, 3 down, it'll be time to buy back in. If you sold or if you're looking to invest for the longer term, subscribe so that you don't miss my updates. Until next time, thank you for watching and happy trading.